I think it's very good news that gold made a big high, a new high rather, without the Chinese buying, because a lot of people thought, well, maybe it's only China, right? China is the driver of this rally. They're just one of the buyers, because even though China didn't buy it all, we still made new all-time record highs. And so I took that as a bullish indicator, not a bearish indicator. But one of the reasons I think that you saw such a strong gold market during this past week is because the Chinese resumed their buying. But it's not just the Chinese that are buying, it's all these emerging market central banks that are buying, because they understand what's going to happen with the US dollar. They understand what's going to happen with fiat currencies in general.
Gold prices experienced a notable spike during the North American session on Friday following the release of U.S. inflation data, which bolstered investor expectations that the Federal Reserve might cut interest rates later this year. This divergence between the Fed's interest rate forecast and market expectations is anticipated to create near-term volatility in the gold market. Analysts highlight that monitoring technical levels will be crucial as gold continues to consolidate. PeterSchiff, an American stockbroker, pointed out an interesting trend in the gold market. Despite a strong dollar and less dovish signals from Federal Reserve Chair Jerome Powell, gold prices rose by 2% over the week after an initial dip. This increase occurred even as the dollar index climbed by about 75 basis points, demonstrating the precious metal's resilience. An additional factor influencing gold prices has been the activity of the People's Bank of China. After 18 months of consecutive purchases, the bank paused its buying in May, causing global gold prices to drop significantly. Spot gold prices fell after this data release, declining 1.4% to $2,342 per ounce. Schiff suggests that China might have strategically paused its gold purchases in May, leading to a market sell-off, only to buy more gold in June. This maneuver allowed them to acquire gold at a better price potentially. Following the news of China's resumption of gold purchases, gold dollar traded at $2,333, gaining more than 1.30% after bouncing off daily lows of $2,301. Schiff attributes the strong performance of gold in the past week to China's renewed buying and significant purchases by other emerging market central banks. These banks increasingly diversify their reserves from fiat currencies, particularly the heavily held US dollar, into gold. Join us as we delve into PeterSchiff's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think the Chinese were able to take advantage of the fact that the market sold off on the news that they weren't buying gold in May to buy a bunch of it in June. And in fact, they're probably going to end up buying more gold in June than they would have bought in May. But because they announced that they didn't buy, they created a sell-off, which they were then able to take advantage of. Now, whether they were smart enough to figure that out in advance, to think, hey, why don't we just stop buying for a month, and then we could tell the markets that we didn't buy, and then the markets will jump to the wrong conclusion that we're done buying, and then we can really step it up. Because I think that the Chinese wanted to back off a little bit. I mean, they've been buying for so many months, and all of a sudden gold spikes up to a record high. It makes sense that they'd want to just back away a little bit and let the market breathe, let it pull back, and then resume their buying. And in fact, as I said in my last podcast, contrary to the way the markets reacted to this news, I think it's very good news. If inflation is going to get worse before it gets better, what if it never gets better? What if it just keeps getting worse? And in fact, if the Fed is going to signal that policy is going to ease, if anything, it's going to ensure that that inflation problem that gets worse before it gets better doesn't get better and just continues to get worse. So while we got the weaker than expected inflation numbers, we also got weaker than expected economic data. And that combination really should have sent the dollar falling and gold rising. Gold did rise. But the dollar rose as well. In fact, the dollar index closed out the week very strong. It was back above 105. It looked like it was really starting to weaken the morning prior to the Fed announcement, after we got that lower than expected CPI. But the weak economic data should have really helped. But I think because Powell was not nearly as dovish as the markets had hoped, And also, I think there was also some concerns, political concerns building in the Eurozone that helped to cause some dollar buying. But on Thursday, we got the weekly jobless claims, which really spiked up to 242,000 weekly claims. That was the largest number in quite some time, and it was way above the consensus estimate of 222,000 jobs. And the 4-week moving average now moved up to 227,000 jobs. So again, more evidence that the labor market is cracking, despite the positive spin on the jobs data that came out Friday of last week, a week ago. I went over that already, that beneath the surface, and not even deep beneath, just beneath a very superficial veneer, was a lot of evidence that the labor market is in fact weak. And these weekly jobless claims support that.
PeterSchiff says, while the dollar index increased by about 75 basis points, ending the week at 105.5 from 104.8, gold and silver also saw gains. Silver closed at $29.63, indicating strong support below $30. Silver also saw gains on Friday. FX Street data indicated that silver prices rose to $29.04 per troy ounce, a 0.26% increase from Thursday's $28.97. Since the beginning of the year, silver prices have surged by 14.02%. Contrary to the positive trend in gold and silver prices, gold mining stocks did not perform as well. Schiff noted that the GDXJ index, which tracks junior gold mining companies, continued to decline, adding to losses from the previous week. This occurred despite the rise in gold prices, indicating a divergence between the performance of gold and gold mining stocks. One example is AM stock, which recently experienced a 5% drop in share price. This could signal either the beginning of a more significant decline or present a buying opportunity. AEM stock had been on an upward trajectory, but faced this recent dip, which some view as a natural correction. Schiff suggests that this cautious behavior among investors is a bullish sign. He argues that the persistent skepticism and lack of solid sentiment, even among gold bulls, create a substantial wall of worry. Let's get back to the interview.
Gold was able to rise 2% this week in the face of not only a less dovish Powell, but also a strong dollar. The dollar index got hit pretty hard on the week. Let me pull it up. The dollar index closed at 104.8 last week, and it closed this week at 105.5. So about a 75 basis point move up in the dollar. Yet despite the strength in the dollar, we saw strength in gold. But even though we had that strength in gold and silver, by the way, although silver was not able to recover the $30 mark, it was still up on the week, and it closed at $29.63. I think, great support below 30, and I think silver is a great buy if you can get it below 30. But the interesting thing is that even though gold itself recovered everything that it lost last week, the gold mining stocks didn't recover any of last week's losses. In fact, the GDXJ actually added to last week's losses, not by a lot, but it was still down. So in other words, a 1.75% rise in gold caused a 7% plunge in the GDXJ. Yet an even larger increase in the price of gold didn't result in any increase in the price of gold stocks. Instead, they fell even further. And so what is that telling you? Because gold itself hasn't really gone anywhere. And in fact, it's holding steady at a high price. It just shows you how negative the sentiment is in the mining sector. And I have been pointing this out. This is a massive wall of worry. Even the bulls, even the gold bulls don't believe the market, at least the bulls that are investing in the mining stocks, because they're so scared. When gold goes down, they run for the hills. And when gold goes up, they have no confidence in the rise because they're worried about the next decline. So you didn't see the recovery in the gold stocks to the degree that you saw the carnage when gold was going down. People got so scared. And this, I think, is an extremely bullish factor because you don't have the strong sentiment. It is the ultimate wall of worry. That's why I've been saying that you can buy gold stocks and gold as a contrarian, even though the price is hitting record highs because nobody believes the rally. We're not that far off from record highs in the price of gold. Yet we've seen a substantial correction in the price of gold stocks, even though we've barely declined in the price of gold. And if you notice what's been happening in gold, it keeps making higher highs and higher lows. Yes, we get corrections when we make new highs, but those corrections don't, go down that far. So the market is consolidating at higher and higher levels as the buyers have to keep paying up to buy gold. The people who are waiting for a return to lower prices, maybe looking at a prior low and thinking, okay, let me just try to buy a retest of that low. They don't get it. If you want to buy gold, you have to pay up. You can get a pullback, but the pullback is not going to give you comfort of being a prior low. You have to be willing to pay a higher price to get into this market because it is a bull market.
Given the complex interplay of factors influencing the gold market, such as inflation data, will gold continue to act as a haven amidst economic uncertainties? Or will other factors, such as shifts in investor sentiment and global economic conditions, play a more significant role in determining its value? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.